Retail Banking and Wealth Management. Friends, this is the second paper of Jaiib. Unlike the Indian economy and Indian financial system, which is totally different from your day to day activities, Retail Banking and Wealth Management is a paper where you can relate each and every chapter with your daily operations. Now, the introduction of retail banking. Let us see what are the concepts of retail banking. Now, banking, if you basically on a larger perspective, if you assume, it caters two different set of people. One is individuals and another thing is firms. Now, firms again, we have MSME firms, which is micro, small and medium. On the other hand, we have wholesale. It means the mid corporate and large corporate companies that take corporate loans from a bank. On the contrary, when we go to the individual angle, we have retail individual people and entrepreneurial individual people. Entrepreneurial individual people are the ones who does agri activities and individual MSME activities. So these people are called as entrepreneurial individuals. The retail individual section is filled with mass retail banking and class retail banking. This class retail banking is called private banking. This is where HNIs come into place, high net worth individuals, and wealth management or wealth managers used to take care of this particular HNI team. In mass retail banking, items like loans, deposits, those things will come. Instead of talking in a bookish angle, let us see a practical example of how this works in real time. I'm showing you the website of State Bank of India. In State Bank of India website, you can see an angle called personal. Now this personal is completely the retail section of State Bank of India. It has accounts, it has investments and deposits. Accounts are the first step in order to mobilize investment and deposits. Next thing is retail loans and cards. SBI Rewards is something like PayZap of HDFC, where for the spends they will be incentivized. But SBI Rewards is run by a third party vendor and SBI does not completely own it. The digital banking activities which is given for the retail banking, that is also a part of the retail ambit. Now why I am showing this screenshot is the same thing is written for around 4 to 5 pages in your book, and even after reading that you cannot establish the items elucidated in those 4 to 5 pages with real world terms. For that reason, I am comparing the items with State Bank of India, India's largest public sector bank. Now if you see the accounts, they are glancing the various types of savings accounts they have with them. Again, it is of two types: salary accounts, where the corporate's salary, central government salary account, state government salary account used to come into place, and individual savings account. They have multiple varieties. This is called BSBDA account. BSBDA, you can also call it as a Jan Dhan account. So these accounts can be opened with minimal KYC, and a person who has a BSBDA account cannot open a regular savings account. That is a RBI norm. And we have MACT accounts, which is also a part of the retail. MACT means you could have seen hit and run cases. A person would have died because of a road accident, and for that a FIR will be filed against the person who has hit him, and the claim settled by the company, the insurance company, will be deposited into this motor accident claim account called MACT account. Resident foreign currency account, and we used to have a separate account called FCNR, which means foreign currency non-resident. Similarly, we have something called FCR also, foreign currency resident account also, where the denominations will be mentioned in USD, CAD, etc. Now, the whole ambit of these deposits and investments is called as retail banking on the liability side. Now, when we do the same thing for the loans, when we give loans for this retail audience, then it is called as retail lending. There comes home loans, personal loans, auto loans, education loans, etc. And the third party, with respect to the debit cards, which is given to the retail audiences, they are also a part of retail banking. While talking about loans cater to the retail section of audience, in our How To Academy, we have launched a particular course, especially for people who are new to retail lending, and it is called as Retail Credit Mastery. It will give the A to Z of lending procedures, key items to be done, checklists to be prepared, proposals to be made while processing a retail loan. Now the next section is NRI section. I said about two things when I said about this retail banking, mass banking and class banking. People catering the NRI crowd are called as class banking because NRI is one area where plenty of CASA can be mobilized with a single email to them. There are many banks, especially I can quote Federal Bank with fullest confidence. Now, Federal Bank is one bank which has a good amount of NRI deposits and they maintain a relationship with NRIs to a whole new level. This Kerala headquartered bank has many NRIs working in the Middle East. Sometimes when the customers return from Middle East, branch managers even used to send cars to Kochi International Airport to have a pickup of the NRI clients. Because that is the amount of the arrangement between the customer and the banker. That's called real relationship. The NRI is one verticalized section where if you cater them with good service, as a bank you can get enough amount of accounts, enough amount of investments, enough amount of loans, etc. So as a retail banker, NRI is one area where you need to concentrate in order to achieve bigger volume of business with smaller volume of concentration. What are the characteristics of retail banking? It is characterized by targeting individual customers or small firms. The customers will be in large number. We will focus towards the mass market and the delivery model will be either through branches or through virtual channels. Nowadays, a WhatsApp chatbot, we used to have chatbots like Eva chatbot. Even in How to Academy, we have a chatbot powered by a company called Galabox. The item which was done by a teller long back is done by a chatbot of late. Now, why retail banking is important to a bank is, especially in terms of lending, the concentration risk will be mitigated when we give loans in a small volume to a large number of audience. I always say, instead of giving 100 crore to one corporate, we can give 1 crore housing loan to 100 individuals. So that even if one or two individuals account become NPA, the rest will remain safe. The concentration risk is mitigated and retail banking is characterized by a large number of customers with a good focus toward mass segment. The advantages of retail banking is, as I said, risk mitigation is one. Strong customer loyalty and less attrition. Very often we see people changing salary accounts. We can see big corporates jumping from one bank to another bank just because the another bank is giving loan at 1% lesser rate. But rarely we could see people jump from one bank to another bank just because of 0.5% increase in savings bank rate of interest. When the big crowd has a loyalty towards you, the relationship will continue beyond generations. This I have seen when I worked for Bank of India. I worked in a branch called Mylapore, which is in Chennai. People used to come and say, I am your customer for the last 30 years, last 35 years. So that is one great thing because for the last 35 years, this guy, despite having so much of wealth, has not even thought to migrate from Bank of India to another bank. The large client base facilitates marketing, mass selling, and there is a scope for classifying the clients using scoring systems and data mining. In banking, we call it as tierization. Depending upon the volume of balances the customer has, his accounts will be tierized, and as per the tierization, enhanced privileges can be enjoyed by him. Less fluctuations in demand and credit cycle as compared to large corporates. Now, a retail credit, if you are in retail credit seat, you can understand what I'm trying to say. Unlike the bigger corporates which jump for minor 1 or 2% rate of interest hike, the retail customers who have a car loan, rarely they do bank transfer. People with housing loans, they used to do bank transfer, but in that case also, the percentage is minimal compared to the large corporates. A loyal customer with a less fluctuation in demand and credit cycle is a bliss for your ALCO committee. ALCO committee means Asset Liability Committee. This ALCO committee gives loans, keeping in mind the loan's repayment will be for a longer tenure with the minor deposits. Now imagine a scenario where the loan is getting closed in just 1 or 2 years. Imagine another scenario where the loan is taken from your bank and it is going to another bank in 1 or 2 years. It will be a huge blow because you need to pay your depositors. In order to pay your depositors, you need to have a good income of interest income. And that interest income can be easily supplied by the retail audience. The constraint in retail banking for banks, when the customer volume is huge, managing them becomes a challenge. I worked for India Post Payments Bank. I resigned that great organization IPBB in the year 2022. When I exited, it was 4.5 crore audience. And now in 2024, IPBB's total audience crowd is 9 crore. So in 2 years, the entire audience count has doubled, but the number of staff members has not increased that much. Softwares have not scaled that much. So when we manage a vast number of clients, there used to be problems linked to it as well. And when the products are rapidly evolving, we need to update our IT infrastructure, and upgradation involves a high cost. Cost of maintenance is one thing where we need to maintain a huge amount of branch networks. We need to do plenty of low value transactions, but they are relatively high in number. Imagine people doing GPay every day for 10 rupees, 20 rupees. What is the cost for the bank? Guys, GPay is free for the audience and not for your individual bank. The bank that is receiving the money, that has an advantage. The bank which is giving the money, that has a disadvantage, both in terms of transaction cost as well as in terms of losing the deposit. And higher delinquencies, especially in unsecured delinquency, means like it is a scenario where the loan is not properly paid. A borrower with a 600 CIBIL score is called as high delinquency borrower. When retail loans, unsecured retail loans like personal loans have delinquencies, then that will lead to a problem. And there is a huge competition among each and every bank with respect to retail banking is concerned. When you go to a mall in Mumbai or Bangalore or Chennai, you can see at least 3 companies forcing their credit cards on you. I used to go to Delhi often. I worked there. In Delhi airport, in the Terminal 1, the moment you check in and go inside, you can see SBI cards appointing 2 to 3 people to sell their premium card products. And the competition results in poaching. Any loss in faith for a particular bank can lead to a sudden outflow of retail deposits, resulting in collapse of a bank. In the later 90s, it happened for Indian Bank, and very recently it happened for Ratnakar Bank Limited. Prior to Ratnakar Bank Limited, it happened for PMC. But these are very minor or the rarest of the rare scenarios in Indian banking system. If you ask me what are the biggest constraint in retail banking, I would say this competition is a constraint, and this overhead cost in maintaining the number of audience, that is a constraint. Evolution of retail banking in India. World Retail Banking Report by Capgemini and European Financial Management and Marketing Association called EFMA says banks are unable to keep pace with customer expectation, and the expectation getting failed because of technology failure and lack of adequate manpower in order to meet the demands of the customer. When a person asks for doorstep banking and your branch rarely has 2 to 3 staff members, how can you achieve it? In that angle, banks are unable to keep pace with customer expectation. So this was a solid report given by Capgemini and EFMA. Expansion of EFMA will be a short Jaiib question. In retail banking paper, the biggest questions will be acronyms, years, terms. And the report also indicated increasing competition from non-bank players which may threat core business. Now, GPay and PhonePe are literally a threat to the existing mobile banking applications of public sector banks. 63% of customers are using fintech products and services, with penetration highest among younger generation. Now, this is what I said because I was a content head for a fintech company called Wisdom. This Wisdom is the partner for major banks in our country like Punjab National Bank, Indian Bank, TMB, CUB, Bank of Maharashtra, and they even partnered with UCO Bank as well. Now imagine 1, 2, 3, 4, 5, 6, and they will continue to part with other banks like Karnataka Bank, etc. One fintech company supplying the demands of 7 big banks. So the database, which is almost more than 5 to 6 crore, is easily taken by this fintech company called Wisdom. And all the audience of UCO, PNB, Indian Bank, TMB, CUB and BOM are ultimately the audience of Wisdom. Thereby, the fintech products and services penetrated much faster rate, and youngsters nowadays also incline towards fintech company, especially in bond markets, in gold market and in equity market. So this is how retail banking is evolving, and banks will have a tough time if they are not equipping themselves to cater their original retail audience. PSBs were content to provide generalized approach to the customers. It was the foreign banks who gave impetus to the retail banking by focusing on customer and industry segmentation. Foreign banks literally made a segmentation of, okay, this is for HNI, this is for domestic audience, and this is for the mass audience. Privileged cards can be sold to HNI, whereas a normal card with 500 annual maintenance fee can be sold to the mass audience. Like this, industry segmentation and customer segmentation was taught to the banks by foreign banks only. And Bank of Baroda and Andhra Bank, these 2 banks are the pioneer in credit card business. I still remember Andhra Bank credit cards were the talk of the town when the concept of credit cards were initially introduced. SBI formed a separate concern called SBI Cards. I subscribed to their IPO also when it launched. And via SBI Cards, SBI is maintaining the credit card business. And when I saw the DRHP of SBI Cards, it says for every 100 debit cards in the country, we have only 4 credit cards. So still the penetration will happen, and the penetration is going to increase multifold in the coming years. Now, the advantage for the private sector banks and the foreign banks is they don't have the burden of legacy systems. Legacy system, I mean, imagine take some branch in a rural part of the country, say for example a PNB. They had around 60 years of records with them. 60 years of customer database has to be migrated, and the average account balance will be very poor, and there will be many dormant accounts. These headaches were not there for new banks, where the moment they opened the bank itself, they had the best of the technologies with them. So this resulted in the core banking solution for all banks. I came into the banking industry when core banking system was not fully functional in the entire banking network of a particular bank. It was expanded in phases, and even now softwares are getting updated. Example, Finacle upgradation happened in many banks, and certain banks moved to Finacle, and especially the merger of banks itself happened by keeping in mind the CBS of a particular bank. You are using Finacle, I am using Finacle. Chalo, we can both merge with each other. That will be very easy. You are using Finacle, whereas I am using a software called Banks. Then in that angle, the migration will be a bigger headache. I still remember the multiple RTGS failures that happened in Syndicate Bank when they merged with Canara Bank. IFSCs had an issue. So like this, the technical hiccups, when they are resolved, then PSBs can also compete with the foreign banks. All banks adopted modern payment settlement system and CTS. CTS is real blessing because with the arrival of check truncation system, the movement of physical checks got stopped. Only the images are traveling, checks are maintained at the branch level itself. Now, RBI data on retail banking in India is one syllabus of your Rbwm book. If you open your Macmillan book, they will be referring to old 2019 data. My dear friends, why I pasted this particular snapshot is I'm pasting it along with the URL also. This is one master database where you can see trend and progress of banking in India, and these appendix tables are statistically correct tables issued by the regulator himself. They say about Indian banking sector at a glance, liabilities and banking operations based on date of reporting. You see this particular report, you can understand the amount of frauds that has happened in our country. So let me show you certain things of this report. If you study this, it says the Indian banking sector at a large, where the number of banks will be discussed and the financial performances will be discussed. Silent indicators of financial health of cooperative banks will be discussed. And statistically speaking, this is the retail asset growth of Indian banking system from 2019 to 2021. From this amount, 12,044 billion, it went to 15,619 billion. In order to arrive at a conclusion, let us compare retail assets in numerator and total assets in denominator. Now, when I do this, retail asset divided by total asset, I will get the percentage. But if I see this retail asset as a part of the total advances, it is constantly increasing, my dear friends. In 2019, it was only 24, but in 2021, it has gone to 28. And the number of ATMs, which is again one among the parameter for ease norms and also a parameter of retail penetration, that is also increasing on a upward trend. So what are the perquisites for success of retail banking? For a bank to achieve very successfully in retail banking, we need the appropriate product and it should be priced perfectly. We need to have good scoring models for accessing credit worthiness. If you study my retail credit mastery package, you can understand what a scoring model is. Scoring model matlab, it's not just a civil score. It has behavioral items like whether the person has a home loan already, whether he is married, whether he is educated, whether he has any habits like alcohol. Now these things are also considering into behavioral rating, because you take the term plan, which is again insurance coming in the retail banking sector. Term plan rates are different for smokers and different for non-smokers. Consumer protection environment. Now, when a bank is constantly breaching the KYC regulations of RBI or harassing the customers with too much of charges, obviously their retail banking will definitely slow down. So, the bank should be fair and transparent in the dealings with customers. Consumer protection and pricing. I explained in the previous point also. Many non-banking finance companies used to harass the customers with plenty of hidden charges. Banks should ensure fair, non-discriminatory, competitive, value-added pricing so that the customer will stick to the bank for a very long tenure. The challenges for retail banking are managing the risk, and the risk by means not just the credit risk, it is about the market risk, liquidity risk, and interest rate risk. Now, banks need to recognize and manage these risks also in addition to the credit risk. The market risk means a sudden change in the market environment will definitely make banks to run out of the CASA. One good example I would say, I went to one meeting of mutual fund distributors. I listened to Mr. Sunil Subramaniam. Who is Sunil Subramaniam? He was the ex-MD of Sundaram Mutual Funds. He was challenging the MF distributors. Friends, in India, the bank CASA is 200 lakh crores, whereas MF is hardly 50 to 60 lakh crores. Is this enough for us? All the mutual fund distributors said, no sir, no, we will raise, we will cross 200 like that. But Sunil simply told them, 60 lakh crores is equal to the saving bank deposit of all the nationalized banks. A saving bank deposit which gives only 2.5 interest, in that 60 lakh crore rupees is sleeping. Whereas a mutual fund which is giving double digit returns, in that also 60 lakh crores is sleeping, means there is literally a failure in logic. When people put the same amount in an instrument which gives 2.5% and another instrument which can give up to 25%, it means mutual fund agents still have a long way in advising the general audience to do the migration. After hearing Sunil Subramaniam's speech, as a banker, I had a fear. Now what will happen? Every youngster navigated their savings account balance to MF. We will not have even CASA. When we don't have CASA, how will we lend? So that's called market risk. And liquidity risk is the ALCO risk, which I have been advising right from my IAFS paper. Interest rate risk is the NIM will go for a toss if banks, in way of competition, seriously increases their deposit rates and failed to deploy the funds in the same amount in line with the deposit into a good loan bucket. That will make them a NIM negative bank. When alternate delivery channels are evolving day by day, fraudulent transactions are also increasing. This is another challenge for the retail banking. Despite best efforts by the bank, more than half of the target population remains uncovered and credit penetration is as low as 10%. Two things are running here in a very fast space. One is the population of the country. Unfortunately, the penetration of banking is not matching it. When penetration of banking is not matching the population increase, obviously we will have uncovered population always. When this penetration of banking outsmarts the population growth, then at that time we will ensure a real continuing growth. Let us see the reasons for the growth of retail banking segment. Why the retail banking segment is growing? I even showed you RBI statistics. Because rise of young Indian professionals, more purchasing power, we are getting more salaries. All the people passing out of the college, a plenty amount of them are getting jobs. Growth as an economic superpower. India is the second most attractive retail destination by the global management consulting firm A.T. Kearney. Now this A.T. Kearney will come as your Jaiib question. Who is the global management consulting firm that rated India as the second most attractive retail destination? The answer is A.T. Kearney. Purchasing power from the middle class keeps increasing, and financial market reforms are aided by the IT sector, and the economic growth is constantly high. Mass market banking offering deposit and loan products is another reason for the evolvement of retail banking and the continuous growth of retail banking. This is a volume driven business, so the more the crowd needs banking financial inclusion, the more the business will also be driven. And in order to make this as a quality business, banks should have a very strong assessment capability with respect to credit, sound documentation, skilled workforce, which is not available at this present era, especially in private banks, and automation of banking process and CBS is a key reason in the growth of retail banking sector. Financial liquidity by issuance of credit card, insurance, third-party products are other reasons for retail banking growth. These value-added services will definitely increase the overall lifetime value that a bank has to obtain from its customer. The other reasons are changing consumer demographics. Here, we have 70% of the population below 35 years of age. Technological innovation made alternate delivery channels to act as 24/7 instrument. There was a day when ATMs were operated till 6 p.m. only when they were introduced for the first time. Later, they will become 24/7 with adequate cash supply. Due to this, instead of keeping the paisa in house, people believed we can keep the paisa in bank account also, so that whenever we need, we can withdraw. That confidence has increased in the growth of retail banking segment. The decline in rate of interest from 16 to 18% in 95 to 96 to 7.529. This I am talking about the loan interest. because I have seen CC customers getting secured credit from bank at a rate of 13%. Now that has reduced to a great extent now. Declining cost of incremental deposits. Now most banks offer very low interest on savings account, and because that is a low cost deposit for them. Because of that, what happened? The loan rates also got reduced. When people can avail loan interest at a lesser rate of interest, that increased in a rise in credit portfolio, whereas it has resulted in a decline in the savings portfolio. But ultimately, the overall business mix in terms of retail banking got increased because of the declining cost of incremental deposits. Change of terms of loans. Up to 30 years for housing loan is permitted as per RBI guidelines. This has made the EMI to appear as a very less figure. COVID-19 was a very important cause so that India started to embrace the concept of digital banking. Banking as a service also increased, and with the arrival of NBFCs, fintech companies, application program interface, it led to experimental banking. Nowadays, WhatsApp API is literally doing magic. Now, as a last part of this particular chapter, let us see how the future of retail banking will be. Definitely, retail banking will have a growth in the digital banking area. Blockchain will be adopted by retail bankers because in blockchain, the cost for money transfer is less and the record gets validated every transaction. No need of any third-party authorization. It is very decentralized, but it is at the nascent stage. Very soon, it will be order of the day in Indian banking system. AI and data science in banking, it's not baking, it's banking. It's a typographical error. Now, according to autonomous research, by 2030, AI will help banks to reduce their operating cost by 22%. Especially in liability products, the entire human intervention will be stopped only. In credit, to a certain extent, it will help in making quicker credit decisions. Cybersecurity will become a top priority. Payment innovations will happen thanks to NPCI for introducing several items like UPI, Aadhaar Payment Bridge System, Aadhaar Enabled Payment System, NACH, and India was the only developing country to introduce this many number of products. Especially contactless payment is a dream for several Asian countries, whereas India achieved it very easily. The rise of big tech in banking industries like Apple, Google, Samsung, they have been given payment services. So Google started GPay. Similarly, Apple started its own, Amazon started its Amazon payment services. When these big techs enter into the banking industry, a huge disruption will happen in the retail banking environment. More people will come into this particular umbrella of retail banking, but the challenge for conservative banks is if they are not adapting to the technology, they will be literally outdated. Thanks for listening to me. Let's meet in another interesting chapter.